Hello and welcome to Chartbusters. Well, the markets are holding more or less flattish. Overnight, we saw a bit of a downtick. Let's get a quick check then, a technical check on the market. Sacchitanand Uttekar of Tradebulls joins in to give us his take. Hi, Sachi. Good morning. Well, how to trade the index? We're a little bit lower in trade. Nothing really to worry. I think we're still holding comfortably above the 20 DMA. What's your sense on the index?
Good morning, Nigel. Nigel, I think the opening has been in line with how we expected it to open. If you look at both the indices yesterday, they displayed a doji kind of formation, a spinning top kind of formation, which is usually a sign of caution. We have seen both the indices slipping below the doji lows, and still, if you look at the trend, the trend remains to be negative for when it comes to Nifty. If you look at Bank Nifty, I think the support is well defined. The 5-day exponential moving average has been defended. So we are not expecting any major weakness when it comes to Bank Nifty. I think the 43,800, 860 kind of a zone may not be violated. But on the higher side, we don't see Bank Nifty crossing the 44,150 mark. So if you look at from a trading perspective, I think the trade setup is better to deploy some shorts in Nifty. Here again, the index has managed to breach below its 5-day exponential moving average, which was somewhere close to 18,600. We are not expecting this particular move to extend towards 18,670, which is the hurdle for the day. And on the lower side, we see Nifty's scaling further lower towards its 20-day exponential moving average, which is placed around 18,500. So I think it is better to create some short positions when it comes to Nifty and avoid Bank Nifty as well.
All right, take that point. You can see the Nifty go lower by almost 80 odd points from here. But individual stocks, what do you have on your list, Sachi?
Well, Mangalam, I think Nifty metals is displaying signs of distribution. What we have been observing here is on the monthly scale, which is the long-term scale, the price action is way too far from its 5-month exponential moving average. There's a differential of around 8%. So yeah, what we have been observing here is a kind of a double top formation with a hurdle somewhere close to 68.50 when it comes to Nifty metals. And in the last few trading sessions, we've already seen signs of distribution when it comes to the individual counters. And JSPL is one particular counter that has hit our radar. If you look at the entire structure, again here, the stock has managed to slip below its 5-day exponential moving average. We've already seen a breakdown below the same, and we are expecting this particular move to continue towards its 20-day exponential moving average, which is placed at around 542. So from a trading perspective, fresh short positions are recommended in JSPL. The stop loss should be placed at around 564.30. Intraday target could be around 542, but positionally we see it scaling towards 530. The second counter on our radar has been Bhartiartl, which we have recommended to our clients. Again, this particular position is more on the short side. We have already seen signs of distribution in last couple of weeks. If you look at the immediate structure, we have already seen a negative crossover in its 5 and 20 exponential moving average, which is a sign of bearish momentum. The critical support of around 830 was been breached today morning. So we see that the next support is somewhere close to 820. So from a trading perspective, again here we are recommending fresh short positions. The stop loss should be placed at 841.20. The target for the day could be around 820, but positionally 805 is what we are seeing on the chart.
All right, take that point. Thanks a lot, Sachi, for joining in and giving us your calls on the index as well as individual stocks.